Welcome back. Well, it's time now to turn our attention to the topic of business exits. And as we heard in our budget roundup earlier, it's become more prevalent probably than it has been for some time, given some of the changes in policy that the Chancellor has introduced. We'll talk about that in a bit more detail with our two guests that we've got here in the studio. We've got Annabel Mason from Evelyn Partners and Mike Yiannis from Santec. And Mike, you were just explaining to me that you've seen this process from pretty much all different stages of the change.
Yes, I've been fortunate in that my career has been all about buying and selling businesses. So I spent the first 20 years of my career as an advisor, corporate finance advisor, advising clients on buying and selling. So over that period, sold about 200 businesses over that period, but got a bit bored of actually doing it for others. So the last 8-9 years, I changed tact and became a business investor and took a position in a number of businesses and have sold a number of those over the last couple of years as well. So I've seen both sides of the fence and been through a lot of transactions.
Is that gamekeeper turned poacher?
That's
or the other way around?
The other way around, depending on...
Has that made you look at your previous job in a different way now?
Definitely, yeah. And I think it's better to be a client than an advisor for sure, at least financially.
Annabel, tell us a bit about your specific role then.
So I'm tax director, so a lot of what I do with helping businesses is looking at the tax aspects of it. So what can we do to get the best tax position for them, for the clients when they're selling the businesses. And I think on that it is we mentioned earlier, it's all about that forward planning. So looking at what do you want, how do you want to achieve it, and then we can layer in what that might mean from a tax perspective and how we work through that to get the best outcome for everybody involved.
And not wanting to put words into your mouth, but I imagine one of the most important things for you is that you can get in at ground level when the planning is not even started yet.
Absolutely. There's a number of different things with tax where actually you need to have the structure in place for potentially 1-2 years in advance of an exit event. So if you come to us the day before, we might be slightly limited what we can do. But that forward planning means that we can look at different options and get it into the right structure for the business.
Does that happen, that you get a lot of people that come to you a lot later than they should have done?
They tend to come a lot later than we would like them to come. Forward planning is definitely our preference.
Right, just talk us through some of the reasons then maybe why somebody would be looking to sell.
The most obvious one is to realise value from their potentially lifetime investment and work. So crystallisation of investment, retirement sale is typically the most common reason. Sometimes a business owner has taken the business as far as they can given their capabilities or given the sector that they operate in, and they're better off being part of a larger group. So the shareholders may not necessarily want to leave or even retire, but they've taken the business as far as they can, and they can thrive by being part of that bigger group. So they're the two most common reasons.
Do sometimes people need to be told, though, that they've taken the business as far as they can? Because it's harder to take an outside look into a business, isn't it, sometimes?
Yeah, it takes a very wise, astute business owner to accept that they've got limitations in their capability, absolutely.
Does that, Annabel, mean some difficult conversations with people sometimes?
Yeah, definitely, because it's just a case of understanding what they want and then trying to sort of broach that with the realities of the business, how it's operating, the opportunities, and it can be that exit. It might be to someone entirely independent, but also you could start to look at, well, are there people in the business that I like what they're doing? I want them to take it forward, and on that sometimes it's a bit easier for kind of the main business holders in that situation because they know who's going to take it forward. But then you're balancing, well, they probably don't have the cash to buy out the exiting shareholders on day one. So how can we get it to work together? And of course, when you've done a sale, if you're still partially involved, I think on a personal level, it can be quite difficult for those people, for both sides, really.
And sometimes, whether this is the smaller the business, maybe the more the people know every single member of staff in a business.
Yeah.
And there's the sort of urge to be completely open and honest and transparent with people, and you can't always do that, though, can you?
No, absolutely. It's really, really hard to manage that. And sort of, Mike, I know you were sort of mentioning in terms of actually having the skill set in the business to actually deal with the sales process itself and those individuals sort of helping.
Yeah, one of my key recommendations to anyone considering a business exit is to appoint an advisor. and that's an advisor on the corporate finance side to process and manage the transaction. Tax advisors and lawyers, they're the three key advisors that you need to line up. And then if you have a chance of, if you're confident of the money coming through, then getting your wealth manager lined up as well. But having advisors on board ensures that things like confidentiality and keeping the business trading as well as possible during the process is very important.
Timing, I guess, is really important as well, isn't it?
That's probably get ready, get advisors on board, but get your timing right, because everything is about timing. And this is all around both what I would call internal timing, i.e. making sure you get your business in the best condition possible and trying to coincide that with the external market conditions also being as positive as possible for the sale. And I've got too many examples where clients at the time held on for too long and they lived to regret it because they were being greedy, they wanted a bit more, something happened in the market and value eroded as a result. So you've got to leave enough behind for the next owner, so leave enough on the table, and just, there's a lot of luck involved, but try and get the timing right, absolutely.
But on the flip side, I imagine if something does happen in the economy that you could capitalise on, you need to be agile enough to suddenly say, right, bang, we're going.
Absolutely.
And be sort of aware enough and able enough to do it. And that's when having the right skills at your fingertips is crucial, isn't it?
Yeah, totally. I mean, the business I'm most heavily involved in, we're an engineering consultancy. And I guess 4 or 5 years ago, we saw the big push towards all things net zero and sustainability. So we very quickly repositioned ourselves from being what on the face of it was just very traditional engineering design consultants, structural and civil engineers and so on. And we became the saviours of the world, all about sustainability, net zero, designing much more sustainable buildings and the built environment. And that really transformed both our financial performance and eventual exit as well.
We talked briefly about the budget at the very start of this. Has what Rachel Reeves has announced changed the kind of dialogue that you may be having with? Has it accelerated conversations with some people about exits?
I think it's going to be, forward planning is even more important than ever. And that's not just sort of what we're talking about necessarily with forward planning in terms of how long a sales process can take, but it's actually really starting to plan much, much earlier from a succession perspective. So I think previously, especially the agricultural industry, because everything sort of tends to go down the generations, that's sort of how it passes down. They would just sort of done all of that on death, quite straightforward, no real inheritance tax issues to worry about. Obviously, the changes to inheritance tax are going to be huge for them because they have got to forward plan. They've got to start thinking about, well, who should be owning the business, the assets, all of those things. So I think it's more important than ever to forward plan, thinking ahead.
Family businesses particularly, I guess, like this would apply to, wouldn't it? With you wearing your CFO hat then, what kind of things are you having to advise people on?
Well, the starting point is understanding the shareholders' objectives. Because the eventual outcome of what process one goes through depends on what their objectives are. And in some instances, it is purely all about money. All they want to do is maximize the value. They don't care who the business goes to. They just want to sell and get out. In many instances, to be fair, that's not the case because they've built the business over their lives. They've got a genuine love and affection for the business and the people that work in it. So they want to ensure the business goes to a good home. In other instances, they're very happy just to pass it on to the employees as well. So understanding the shareholders' objectives, what are their value aspirations, what are their, how long do they want to stay involved in the business, and what type of new ownership are they interested in, then determines what the exit route should be. And that then pushes you down either doing a sale to an employee ownership trust, for example, where employees take over, or to a management buyout, or it could be just a trade sale, or even to private equity. So there's many different options out there, but each one is more suitable for certain sort of shareholder objectives that you need to try and match up.
And also on that, it's thinking about when they get the money, what do they want to do with it? So do they want to just realise as much as possible, sail off into the sunset, so they want it all in their back pocket? Or actually, if they're very entrepreneurial, they actually might go, well, I want to use most of the proceeds, if not all, and set up a new business, and that influences how we might look to structure it. So it's not just sort of, it's looking on both elements. It's looking forwards and at the current position.
Talk to me about tax, because you've talked about inheritance tax specifically, but what are the other tax considerations that have to be looked at?
So, I mean, there's capital gains tax. So again, it's, if you want the money in your back pocket, you're looking at capital gains tax that's payable by the individual. If you're looking at reinvesting, we might look at a structure where actually we can get it's into a corporate entity, but it's actually a tax-free sale. So again, it's balancing what you want as an individual with what that means from a tax perspective. And on some of it, when you're looking at reliefs and different things, it's actually going, well, what's the amount you actually want? We'll get you the best tax rate. But if it's the worst position, are you still happy with the money that you're ending up with? And if the answer to that is yes, it's a lot easier. If it's, well, no, I've got to have this bit, it makes the tax a little bit harder to manage.
We talked about capital gains tax going up in the budget, both levels of it. Do you think it's gone up enough to make people think that they need to change their minds? What do you think, Michael? Some people expected it to go up more, didn't they?
Absolutely. Yeah. There were some real horror stories coming out of it going up to, equalising with income tax rates or sort of 39-40%. And I'm aware of friends and colleagues in the industry that were killing themselves to get deals done before the 30th of October. In the end, the increase in percentage terms wasn't that great, so I don't think it's changing business owners' decisions that much. Yes, there's more CGT to pay, and I think most people will accept that. I think the change to inheritance tax and the business property relief that Annabel mentioned earlier, I think that will have a bigger impact on decisions, because family-owned businesses will probably be pushed towards selling rather than passing them through the generations to avoid what would be quite an expensive inheritance tax charge. So that's probably a bigger impact on business exits than maybe capital gains tax changes will be.
Are people in general terms looking to sell maybe a little bit earlier than they were? I know there was a report as we came out of the pandemic, people saying they were looking at sort of altering their work-life balance and deciding, right, we might just allow ourselves a little bit more time to spend our money. Have you seen that? Maybe.
I mean, it comes back to the price, doesn't it, as to what are they actually going to get when they sell the business. So, and I think that's the important side of that, is actually reflecting on what do they want. If that's what they want to do, they want to look at, work-life balance. You're then looking at, right, well, how much money do you need for the rest of your life? What figure does it need to be that you sell it for? And then it's a case of, really sort of assessing that side of it. So it might be that the business was worth 10 million, but you want it to be worth 20 million. But actually, with some financial planning work, it's realised that, well, you only really need 12 million for the life that you want for the rest of your day. So sometimes it's not necessarily the headline figure, it's what figure do you need.
And that's probably one of the things that's changed among a lot of people in terms of their desires, their expectations and their lifestyles as well, isn't it?
Absolutely.
Which I guess is why you can't have a template that you pull down off a shelf for any of the people you deal with, can you?
No, every transaction is bespoke in every regard. So you have to tailor the process, the tax planning, the legal advice bespoke to that particular situation.
What's the biggest challenge out there, do you think, for people? Is it looking to sell? Is it making the first step? Is it understanding the support they're going to need to see it through? Is it where
I think the support side of it is massive, because sort of as Mike sort of alluded to, it's not something that they're used to doing on a day-to-day basis. So, corporate finance, that level of support, it's something that their in-house accountants, sort of their in-house management team won't be familiar with, because it's specialist. So I think it's actually sort of understanding what the process involves, the paperwork, everything that you have to go through it's a really big event. It's a big event, and I think emotionally, quite often it's hard for the shareholders, for the people involved, because they just don't understand what's involved.
And how quickly typically could that whole process be complete?
Oh, I like to take as long as possible to give me plenty of time. I think pre-budget there was quite a lot of people scrambling around doing things quite quickly. I think it's probably a 12-month process would be a reasonable estimate start to finish?
Yeah, I mean, they say your business exit strategy should start on the first day you start a business in theory, but clearly you don't officially start the process until you're ready to go. The most recent sale I was involved in, we were planning for 2 years, and there was a lot of tax planning involved as well as business planning as well. So there's no right or wrong answer, but you can't just put a for sale sign on front of the business one morning and get a buyer in the afternoon. It doesn't work like that, unfortunately. There's a lot of preparatory work that's needed.
I'm interested to know, since you moved from one side of the fence to the other, what do you know now that you wish you'd known in your previous life?
Oof. It's a very good question. I'm struggling to answer that.
I never thought I'd make you speechless.
Yeah.
That's
My true answer, I don't think we can publish, but I guess when you're on the inside of a business, you can influence what information is presented and how it's presented in a far more effective way than if you're outside and as an advisor. So we could control the narrative as to how we were trading, the sectors that we were in, and present the business in a much stronger light than an advisor would ever be able to, because they're not involved in the business day to day. So you don't truly understand a business or a sector that they operate in unless you're actually in that business and that sector. So I think that was the big learning curve.
Yeah, it makes sense. And I could almost ask you from the flip side as well, what do you require, of a director, of a senior manager of a company, if you're going to do the best you can do for them?
So I think the starting point is probably actually being, if I'm supporting them, is be honest with me. Tell me what I need to know. Don't hold back. And then again, similar to you, but we can then frame the narrative as we need to. It's much easier, if you tell us everything, and we can then deal with that, rather than trying to not mention it and then sort of we get caught out at the last minute. So I think it's just being, open and honest from day one.
Okay, so my final question to both of you, if there's a business out there that's watching this and thinking, I'm thinking about selling, if there's one thing you'd encourage them to do, it would be what?
Plan.
Get advice.
Basically, two sides of the same coin.
Yeah,
isn't it?
absolutely.
Yeah.
We've ended in agreement, which is a good way to finish, isn't it? Thank you both for your time. Thank you so much.
Thank you.